more. I still like the silver trade better because I think that's going to explode. And I think once it goes to 40, the move to 50 can be very quick. But in the meantime, is if you want a stable coin, you can't have a US dollar coin because it's not stable, because there's no stability to the dollar, right? Why do you want to hitch your boat to a sinking ship, right? You're going to sink with it. It makes no sense. So if you really want a stable coin, you need something stable to anchor it, and that's gold. And there's no talk about that, but that's where the stable coin should be headed. Gold-backed stable coins, tokenized gold. That makes perfect sense.
Peter Schiff believes the real explosive upside may lie in silver, especially if it breaks above the critical $40 level. Such a breakout, he argues, could quickly trigger a surge toward $50. As of Tuesday, spot silver was trading at $38.50 per ounce, marking a year-to-date gain of roughly 25%. Momentum in the silver market continues to build, with financial analysts noting a spike in lease rates, often a precursor to significant price movements. Tavi Costa, portfolio manager at Crescat Capital, highlighted this development on social media, comparing the current lease rate spike to those seen during the 2011 silver bull market when silver briefly touched $50. Amid this bullish sentiment in precious metals, broader shifts in the financial landscape are also influencing investor behavior. The U.S. House of Representatives recently passed the Genesis Act, a bill designed to regulate dollar-pegged stablecoins, with strong bipartisan support. President Donald Trump is expected to sign the legislation into law. While the crypto industry welcomes regulatory clarity, Schiff warns that trust in dollar-based assets, including stablecoins, may erode if confidence in the dollar itself weakens. He argues that Washington's ongoing deficit spending and the weaponization of the dollar through sanctions are more damaging to U.S. monetary credibility than any external threat. Economist Jeffrey Sachs has echoed similar views, noting that these policies are prompting countries to explore alternatives. Schiff insists that a truly stable digital currency must be backed by something tangible, like gold. In his view, gold-backed or tokenized coins offer a sounder foundation than fiat-based digital currencies, which merely repackage a weakening system. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
They're trying to tout these stable coins as the salvation of the dollar. Right? That's the biggest BS, to say that, oh, these stable coins are going to save the dollar because they're denominated in dollars. Well, so what? I mean, there's nothing that stops anybody anywhere in the world from issuing a stable coin that's denominated or backed by euros or Swiss francs or yen or Australian dollars or any of these currencies. I mean, so what's so special about a dollar stable coin? Absolutely nothing. People are saying that, oh, this is going to help create demand for treasuries because the issuers of stable coins are going to buy treasuries. Sure, they're going to buy treasuries, but that's not going to be enough to offset all the treasuries that China and Japan and Saudi Arabia and everybody else are no longer buying, let alone selling. And again, the stability of a dollar stable coin rests on the stability of the dollar. So at the end of the day, if people are losing confidence in the dollar, they're not going to buy dollar stable coins. They're going to be avoiding them or getting out of them, right? That's the whole reason that people are buying gold. The reason they're buying silver. By the way, during the week, silver got above $39 an ounce, right? We're almost at 40. I think we're going to be above 40 shortly. This is the first time since, I think, 2012 that silver got above 39. It pulled back slightly. I mean, I think it closed the week, around 38.5, yet silver stocks are still maybe more than 10% below their peak. That's how much they pulled back on a tiny 1.5% correction in the price of silver. You got a dumping of silver stocks, which had made new 52-week highs as silver went up. And then, of course, it's very weak hands in the gold and silver mining stocks. People still don't have the conviction of this trade. It's climbing a wall of worry, and there's tremendous amount of worry on this wall, which is why I think these stocks are still great buys. Platinum almost hit 1,500. Remember, on my podcast, I specifically told people a couple months ago, when platinum was still below 1,000, I said, you got to buy it. Buy platinum. I said, gold is 3 times the price of platinum. Platinum's risen 50%. That was a great trade. Now, I think platinum may pull back a little bit more. I still like the silver trade better because I think that's going to explode. And I think once it goes to 40, the move to 50 can be very quick. But in the meantime, gold has been going sideways. It's like 3350, 3400. I mean, it's been trending sideways because the Nasdaq has been making new highs. It made a new high last week. The S&P made new all-time highs. In fact, on Friday, the S&P and the Nasdaq made new record highs. Now, they didn't close there. They actually closed slightly negative on the day, but they still printed new highs. That's why the interest in gold has temporarily taken a back seat. And that's really what's driving crypto. It's the appetite for risk assets. Gold has been going sideways. And in that environment, Bitcoin has risen along with the Nasdaq and all this extra hype surrounded by crypto week. But getting back to this stablecoin. So the stablecoins are not going to save the dollar because they don't increase the appeal of the dollar. People are saying, well, everyone's just going to use these stable coins in global commerce, and so that's going to create a need for the dollar. They're not going to use these coins. If the world is de-dollarizing, then they're going to de-dollar stable coin too. They don't care. They don't care how you wrap up the dollar, what kind of fancy packaging you want to put around a dollar. At the end of the day, it's still a dollar. And if I don't want the dollar because the U.S. is running huge budget deficits and huge trade deficits and imposing these tariffs, then why the hell am I going to want a U.S. dollar stablecoin? I am not. I mean, ultimately, the way crypto is going, the way this thing ends up is if you want a stable coin, you can't have a US dollar coin because it's not stable, because there's no stability to the dollar, right? Why do you want to hitch your boat to a sinking ship, right? You're going to sink with it. It makes no sense. So if you really want a stable coin, you need something stable to anchor it, and that's gold. And there's no talk about that, but that's where the stable coin should be headed. Gold-backed stable coins, tokenized gold. That makes perfect sense.
As part of his campaign to remove Jerome Powell, President Donald Trump has repeatedly blamed the Federal Reserve Chair for costing the country hundreds of billions of dollars by refusing to slash interest rates. In a handwritten note posted to Truth Social, Trump told Powell, "You have cost the USA a fortune and continue to do so. You should lower that rate significantly. Hundreds of billions of dollars are being lost." Trump continues to argue that high interest rates are damaging the U.S. economy, citing their impact on mortgage costs and the ballooning national debt. Speaking again on Friday, the president insisted that the Fed's policy rate should be as low as 1%, a level typically reserved for periods of economic weakness, not inflationary environments. His comments reflect growing political pressure on the central bank ahead of the election, particularly as the cost of borrowing remains elevated. Peter Schiff, however, offers a starkly different perspective. He contends that interest rates are not particularly high by historical standards. With the federal funds rate slightly above 4%, Schiff argues this level is relatively moderate and that Powell's policy stance has not been overly restrictive. The criticism that Powell is too tight makes no sense, Schiff says. If anything, he's still too loose. The debate over interest rate policy is intensifying as inflation remains persistent and the cost of servicing U.S. debt continues to rise. Let's get back to the interview.
In a recent interview, Donald Trump said that the job of being Fed chairman was the easiest job in the world. Basically, any idiot could do it. And so we need to get rid of Powell because apparently, even though any idiot could do the job, Powell isn't even up to the task because he doesn't understand that rates need to be cut. And in fact, it's not just Trump that's saying this. Everybody, especially if you look on X at Bill Pulte, who is the head of the Federal Housing Finance Administration, he's repeatedly calling for Powell to step down. He's blaming Powell for the high cost of buying a home because he's saying the mortgage rates are much too high. And that's the same thing Trump is saying, that because of Powell, it's so expensive for the U.S. government to finance its debt. And so it's Powell's fault that the interest expense is so high because the Fed has interest rates sky high. In fact, I hear a lot of people talking about how we have sky high interest rates. We've got a 4 handle on the Fed funds rate. There is no way you can argue that a rate that low is sky high. In fact, all of the criticism of Powell is because he's too tight, when in reality, he is too loose, right? I am not a big fan of Powell either. I mean, I criticize him quite a bit, but I don't criticize him for not cutting rates. I criticize him because he cut rates. He cut them he didn't cut them, rather. He took too long to raise them. He inherited low rates from his predecessor, and he left them too low for too long. And when he finally, belatedly, started to raise rates after claiming incorrectly that inflation was transitory, when he finally addressed the inflation problem, he was too late. I agree with Trump on that, but where I disagree with Trump is that he's too late to cut rates. What he was too early in doing was aborting the hikes. As I've said many times on the podcast, Powell stopped hiking too soon. He never got into restrictive territory. And the way you know that is because debt never stopped expanding. Consumer credit, corporate credit, government debt continued to hit new all-time record highs despite the rate hike. And that's because the rate hikes were not enough. The rate hikes weren't high enough to cause a contraction in credit. Because remember, inflation is not just the expansion of the money supply, which did temporarily contract, although not nearly as much, and now it's back in expansion mode. But credit not only didn't contract, but accelerated its growth. And so the inflation fire that the Fed lit was never put out. What Trump really wants Powell to do is throw more gasoline on that fire. And because he won't do it, people want him to resign. In fact, if you look at the most recent statement by Trump during the week in one of these, Q&As, he said that we should have 1% interest rates. That's where he thinks rates should be. 1%. He says we deserve it. We should get it. And for some reason, this moron, this imbecile, Powell, is refusing to go to 1%. Now, think about that, because Trump is also talking about how strong the U.S. economy is, how it's unprecedented in its strength. It is the hottest economy in the world, according to Trump. And not just today, but historically. To hear Donald Trump talk about the current U.S. economy, this is the strongest it's ever been. I guess it's even stronger than it was when he was president the first time. Now, if the economy is this strong, why should interest rates be at 1%? Especially, and I'm going to get into the CPI data that came out earlier in the week during the podcast, but the official CPI rate is much closer to 3% than 2%. And so given that inflation is well above the BS so-called target that the Fed has adopted, but if we have above target inflation and the strongest economy ever, why should rates be at 1%?
Markets often whisper their warnings long before they shout out loud. Recent turbulence in lease rates, political friction over rate policy, and the ascent of alternative financial instruments all point toward a deeper fracture in the monetary order. As traditional fiat frameworks are tested by internal policy missteps and external adoption hesitations, the appeal of finite, tangible assets intensifies. Simultaneously, silver's technical setup hints at an inflection point, with long-standing resistance levels on the verge of collapse amid tightening physical dynamics. Meanwhile, digital assets backed by trust alone face mounting scrutiny, especially as regulatory clarity meets growing skepticism about the very currency they mirror. Could we be nearing a dual reset, one where physical metal reclaims monetary relevance and digital trust migrates toward what's scarce? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.